Welcome back to another weekly Forex forecast, everybody. Let's get right into this week's Forex forecast. As far as the US dollar goes, the DXY, we were actually bullish this past week, and we did get a nice move to the upside. Nothing huge, but definitely a move to the upside. Why were we bullish? Well, many reasons. Number one, on the weekly time frame, yes, we do have a weekly downward trend. That is certainly a bearish price action for sure. On the weekly chart, though, we had a weekly demand in control and a monthly demand in control. So that's why every time the dollar pulled back to basically below 97, we were bullish on the DXY to see a move to the upside. With the monthly demand in control, we could actually definitely see this trend line break, push up to weekly supply at 103.06. That is what we could expect to see. There are signs we're going to have to look for on the lower time frames, but we were bullish. And I've been calling it out ever since we started to pull back here on the DXY. I called out this move perfectly from this very specific demand zone at 96.55. You can go back. This is a picture from one of the previous weekly Forex forecasts here on YouTube. So I called out this move for free for everybody in the weekly Forex forecast. If that's not a good reason to hit that like button and subscribe if you're new to the channel, I don't know what is. So definitely hit that like button, subscribe if you want to watch more free forecasts like this. And we'll come back to this chart in a second, but why, another reason I was bullish on the dollar was, again, the higher time frames. But on the daily chart, we had a very clear area of resistance here. And I don't trade support and resistance. I trade supply and demand zones. Now, and how I view price action here is there are stop losses here. This represents liquidity above the resistance mark. So I was expecting the dollar to push up to this supply, which I still think we are going to be going there. And then again, I think we will most likely react off of that daily supply at 98.33. Clearly a little bit of bearishness here on Friday as we really couldn't push up anymore, but the liquidity has started to be targeted. I think we will continue to push up, hit this supply, and most likely react off of this supply. Since the monthly demand is in control, I'm not expecting to see a massive move off the zone. It's certainly possible. I'm expecting to see a small move and then end up breaking it. That is what I'm expecting based off of my multiple time frame analysis. So on the 4-hour chart, we do have a 4-hour supply with its own liquidity before it. I think we will see a small move off the zone. Ultimately, I think we will be breaking it because the daily supply is sitting right above. So I think a small move off the zone at 98.14 is plausible. And then a pullback above to react off the daily supply and then most likely reacting. This is what I'm expecting to see on the dollar this next week. The nice trend line here definitely gives us strength. Again, beautiful move off of our daily zone. Nice trend line to the upside. In my opinion, it is all bullishness here on the dollar. However, when we start to contact these supply zones, I think we could have, a weak day in the dollar. So definitely want to map out those zones on the DXY, the daily supply and the 4-hour supply at 98.14. Those are two key zones, as well as this trend line that you guys need to mark on your charts to determine where price is going to be going. And again, once we hit these zones, I'm expecting to see some dollar weakness. But for now, dollar strength until we hit those supply levels. On to the forecast for the Euro US dollar. I've been pointing out this daily demand for quite a long time. Liquidity right before the zone. Price was sitting pretty much at that area of support. And we caught a beautiful trade. Let me show you guys here in a second. Beautiful 1-hour supply zone trade right there. Predicted beforehand in the daily market breakdown video, as you guys can see. And look at how many members in our Discord group caught this trading setup as well. It was literally picture perfect. Profit margin to the downside. I didn't personally catch the entire move, but as we contacted demand, look at what happened. I'll point out that demand in a second, but just wanted to show you guys, and I'm so proud of my members for taking that setup as well. And again, that was called out before the trade took place with video evidence in the daily market breakdown videos. If you want to trade alongside myself and the members, join the Diamond membership, where you will have access to the 38-page supply and demand zone PDF, which will be your complete trading guide, the daily market breakdown videos, which are forecasts that I release every single night for the members to trade alongside myself, step-by-step video lessons A to Z, covering everything you need to know on supply and demand trading, the Sunday strategy Zoom session, where members submit homework, and it's an interactive 1-hour call where we go over all of your homework and every trading related question, private access to myself inside of our private Discord group where I answer all of your trading related questions. And finally, the Sunday live stream forecast where we break down over 30 markets together. And it's not just me. Here are some of the members and some of their trades they've been taking lately. Absolutely killing it. And we also have some amazing reviews from some of the past members sharing their experience within the group. So if you're ready to trade alongside myself and the community, join the Diamond membership today. Links in the description down below. So this was not a time to get greedy. Why? Why did we move up from here? It wasn't random. In my opinion, we moved up from here because not only was a 4-hour demand in control, but a daily demand was in control as well. So that is why it was kind of a quick trade. That's why I didn't get the entire move. But again, it was just a quick trade before price contacted a higher time frame demand. So it was a little bit of a risky trade, but at the end of the day, it worked beautifully. And now that we have a daily demand in control, we want to be looking for longs. So we had two options. We had this 4-hour area of demand at 117 so far. Nice reaction off of this demand zone. You can go back and watch my forecasts on YouTube. I've had the zone the entire time. Beautiful move off of this zone so far. We do have a little bit of a trouble coming ahead while we have this 4-hour trend line to the downside. We definitely could maybe see a move off of this trend line, but you know what's stronger than a 4-hour downward trend line? A daily area of demand. So that's why I'm expecting to see maybe a somewhat of a reaction off the trend line, but ultimately breaking it. So since the daily demand is in control on the euro, we certainly want to prefer longs. Longs is our bias now. That's why we are out of that short trade on the 1-hour chart. So we pretty much have two options. On the 4-hour chart, if we were, again, this option, this set and forget has already taken place. So if you missed that, that's fine. We have a couple more options. If we remove this downward trend line and there's a demand there on the 4-hour chart, that would be our pullback entry long. Looking for a demand zone there. That is option number 1. And option number 2 is confirmation by removing this proven supply, the supply we already got a trade off of. Why is it proven? Because we proved there was supply there multiple times as we got multiple reactions off of the supply. We got a trend line break, but there was just no demand here for me to call a trade. So at this point, we need to, let me just get rid of this trend line. So at this point, we are looking to see this proven supply removed. And if there's a demand zone there, that would be our confirmation trade on the 1-hour chart. It's really that simple here on the Euro US dollar. On to the forecast for gold. Look at the top left corner and the bottom left corner. This is the weekly chart above here, and this is the daily chart. Look how strong it's looking. Yes, we did get a massive pullback, but look at the massive move we got to the upside. So to see a pullback like this is completely normal, and it's actually quite healthy. Nice reaction off of our daily trend line, looking very strong on gold. And that is why I called out this 1-hour demand zone setup. Beautiful trade, definitely way bigger of a move than I thought. I did think we would see a move to the upside, maybe pull back, break the zone, and then push up. But I mean, what a trade. Called out ahead of time in the daily market breakdown video. Again, video evidence for all the members to look at. And again, I call out all these trades before they take place with video evidence. I'm not just showing fake P&L and fake broker statements and all that crap. Real trades, real evidence. Anyways, nice move off of the zone, definitely bigger than I expected. 1-hour trend line to the upside, so we could definitely be looking for longs. Let me just put a channel tool on here to show us where we are at. So if you look at the channel tool, we are definitely above the 50% mark. It's pretty overextended in my opinion. So it's a beautiful trend line. We definitely want to be preferring longs here, especially because the higher time frames are up. We want to be looking for longs. With a 1-hour trend, we want to look for 5-minute time frame longs. But we are above the 50% mark of the channel. So I think waiting for below the 50% mark to trade near the trend line, I think that makes more sense on a 5-minute time frame. So I think just being a little patient here, waiting for this 50% mark to be hit and go lower, then 5-minute time frame longs are definitely going to be decent. On the 4-hour chart though, I was also pointing out this 4-hour supply. It is not looking great. And again, this is a counter trend setup. This was a low odds situation due to the fact that the daily and the weekly trend are up. So this is a very low odds zone in my opinion, and it's really not the greatest zone anyways. I mean, the move away is not bad, but when you kind of zoom out a little bit, it's mediocre at best. So to me, this is definitely looking very weak, a week for the zone rather. So we have a couple options here on the 4-hour chart. If we remove that supply, if there's a demand zone here, it could be a good long opportunity. Doesn't look like we're forming anything here though, so that might not take place. Or if you want to be more conservative with the trend, if we remove this high, there will be a trend line here that I'll have on my charts for the members. And then that trend line will be our guide for 15-minute time frame longs. It's really that simple. All going to revolve around this 4-hour supply potentially breaking and the 1-hour trend line to the upside. Unfortunately, I don't really have a zone to point out to you. This trade was called out midweek, and that's why that trade worked out beautifully. So not really any good zones right now. We got to be a little bit patient. You could be day trading long right now on a 5-minute chart. Again, we got to wait for a pullback. I think that's healthier. Or if you want to be very conservative, wait for this supply to be taken out. And then that's pretty much our sign that, hey, we're most likely going to be going to all-time highs again on gold. Alrighty, on to the forecast for the S&P 500. Let's take a look at the weekly chart. Throw a channel tool on here. Look at where we're at. We are actually floating above the top end of the channel here. So to see a decent 5 to 10% pullback on the S&P is pretty realistic, guys. So keep that in mind, right? If you're buying up here with no stop loss, we're pretty overextended. So just based off of price action and a channel, we are very overextended. I mean, these markets are literally designed to go up. So I think I wouldn't be worried if you're investing in the S&P 500 or anything. I'm just saying, look at where we're at. We are pretty overextended, if you ask me. And that's why we've kind of been failing to go to the upside, in my opinion. We had a couple trend lines there, really just sideways market here. And we did create a daily supply by removing this trend line at 69.47. Not my favorite zone. I personally never short the S&P 500 or any index. That's just one of my rules because, again, they're literally designed to go up. You can look into it yourself. There is a daily supply here. I think we will at most just hesitate here. To get a one-to-one move off this supply is possible, but I think we will just hesitate. I don't think we're just going to blast through the supply unless some crazy news or whatever. But again, I think we will just see most likely a small move to the downside off of this daily supply before we end up breaking it. So that's definitely just something to consider as we are now floating below the trend line. But remember, the weekly trend is up, so we are actually expecting this supply to break. We are overextended, but again, we kind of just can't just say, oh, we're overextended, we're going to get a pullback. That's not really how trading works. So we do have a couple options. Right now, on the 1-hour chart, we do have, it was nothing was going on the S&P all week. We're going sideways. We are ranging here. Then we are ranging here. Finally, on Friday here, we did break above this high, which has given us a properly drawn 1-hour trend line to the upside. Let's throw a channel tool on this, and we will take a look at where we are at. It's not a bad spot, but we do probably want to get some sort of pullback below the 50% mark. Then I think looking for longs on a 5-minute chart makes sense to me. So it's not terrible. It's not like we're up here. But again, I always prefer, if you're going to be doing that, I prefer below the 50% mark on a 5-minute time frame. Just, based off of the concept of buying low, selling high, right? It's just very, very simple. If you look at it on a 4-hour chart, things that get a little bit more clear in my opinion. I mean, look at this range we've just been in this entire time. Not great. Again, nothing was really going on this week. It was pretty non-exciting for the S&P 500 this week. We do have a couple options. There is a 4-hour supply above at 69.56. Again, I personally don't short the indexes. If you are going to short at this supply, you can. I would be very aggressive with trade management, looking for like a 1-to-1, 1-to-2 max. A small move off the zone, I would at least put my stop to half risk or to break even, or lock in some profits, move the stop to break even. Take what you got. Because again, these markets are designed to go up. So the supply zones, I always think we can get a small move off of them before we end up breaking it. And all I'm saying is there's a little bit of money to be made here. We just got to be aggressive with trade management. So that's what I'd be doing, a short trade off of that zone very quickly. And then me personally, if we remove that supply, preferably the all-time high as well, any demand there is going to be a beautiful pullback long on the 4-hour chart. Let's say we really start to pull back here on the 4-hour time frame. Let's say even if we react off it or whatever, if we pull back down to this 4-hour demand at 66.48, it is an old zone, but it's a good zone. And I think we could see that would be a decent little pullback entry down at 66.48. So that's pretty much our only options on the S&P 500 here. Follow the 1-hour trend if you're a day trader. Look at the 4-hour supply and demand if you are a swing trader. Keep an eye out for this daily supply as well. I think we will most likely react off of that supply. And the 4-hour supply is actually embedded inside the daily supply. So that's why I think this 4-hour supply is even higher odds to see 1-to-1, maybe a 2-to-1 move off of it before we end up breaking it. Alrighty, on to the forecast for the USDJPY. Really no demand down here, but we did get a move off of it just based on the concept of at a low. Nice move to the upside. I think we have tons of room to pull up to this daily supply, target the resistance liquidity at 158.09. I think we will see a small move before we end up breaking it. We'll have to see what the DXY is doing as well during that time. Been a pretty boring week for the USDJPY though. Really no trend, no zones forming here. So it's really not the best. There is an older 4-hour supply above. It's pretty old now, but I would like to, so what I would like to see in old zones is somewhat of a reaction off of this old resistance. That to me shows their stop losses here, which makes that zone higher odds for a potential short trade. So that's what I would prefer to see here on the 4-hour chart. In the meantime, this 1-hour chart is pretty clear. We had a nice trend line to the upside. That trend line, the trend line was actually from here to here, and then it has to be adjusted from here to here, and then readjusted to here. Kind of complicated, not really important. There's a 1-hour supply above at 155.28. I personally would ignore the zone. I think we will seek dollar strength. If you want, yeah, you could short at the zone. I don't feel comfortable shorting. Could we see move off of it? Sure. The safest bet is to look for a 5-minute time frame confirmation off of that supply, which means you don't just have an entry and a stop. You're going to go down to a 5-minute chart and look for little supply zones to be formed inside of it, because ultimately I think we will be breaking it. So if you're going to short at the zone, I wouldn't be greedy. I'd be looking for a 1-to-1, stop to half risk, stop to break even, profit taken at 1-to-1 I think makes more sense. Ultimately, since we are kind of bullish on the dollar, if we remove that supply, any demand there is going to be a nice pullback for a long trade on the USDJPY. On to the forecast for the GBPUSD. We will do a full top-down analysis here. Beautiful weekly trend line, basically as good as it's going to get. This trend line is being respected. We haven't really tested it yet because the trend line is drawn from here to here. So we will be coming in for a test most likely if we do continue to trend down, and we could see the trend line hold. So that is the weekly chart. Definitely bullish base off of this weekly chart. However, on the daily time frame, we did just, in this past week, we did just remove this daily upper trend line. And this was a good trend line, in my opinion, a very nice trend line. It was removed. We now have a daily supply above at 1.38 and our daily demand down below. So we're basically in the middle of the curve here. So trading it is going to revolve around the H4 pretty much to see what the trend is. If we do get so if you are swing trading short, very simply put, our profit margin is down to daily demand at 1.32. So make sure you copy the zone in your chart. And if you are looking for longs, our profit margin is up to daily supply at 1.38. So make sure you guys copy those zones on your own personal chart. As far as trend goes, beautiful 4-hour trend to the downside. Very, very nice. We are pretty overextended though. Channel tool really shows us that. Actually, we are not. My mistake. It looked like we were. We are basically just hovering around the 50% mark. So maybe being patient, wait for a pullback near the trend line. Could be good to continue to look for 15-minute time frame shorts. That's really about it on the pound right now as far as the 4-hour chart goes. Not really seeing any zones. On the 1-hour chart, I drew this zone in the morning, and what a move off that zone. Unfortunately, I didn't get that trade, but it is what it is. Beautiful move off that supply. If so this trend line here is attached from, oh my God, here we go. Attached from here to here. This is a reaction off of our trend line. So it is being respected right now. I will say if we do remove that trend line, if there's a demand zone there, that would be our pullback entry long. It's really that simple. But as long as this trend line's holding, you could justify looking for 5-minute time frame shorts on the GBPUSD. And if you like to trade the 15-minute time frame, you want to be looking at the 4-hour chart to the downside. And again, profit margin, there's lots. We're basically right now with the 4-hour trend line. To me, that's telling me we're most likely headed down to daily demand at 1.32. So where price is at now on the daily chart, this represents our profit margin to trade with the 4-hour trend to the downside. On to the forecast for the USDCAD. This is the country I'm from, country I am currently living in. Let me know where you guys are from in the comments down below. I'm always interested to see. On the weekly chart here, second pullback to our weekly demand. Nice move off of it so far. I personally don't trade at tested zones, but nonetheless, beautiful demand zone, and we are reacting off of it again. Trend line though is in control here on the weekly chart, but we do have some liquidity above, so it wouldn't surprise me to test the trend line, maybe even break it to pull up to the supply at 1.39. As far as the lower time frames go, let's take a look. The daily trend to the downside, it was pretty overextended, and now we are currently pulling back up, maybe going to test the trend line. So let's go down to the lower time frames and see what is taking place. On the 4-hour chart here, this is basically one big range. So what we want to do, the safest bet is to wait for this high to be removed. Unfortunately, we won't have a trend line here. It's just a little too sideways for me to draw a trend line. But breaking this high would give us a H4 uptrend. That uptrend would make me, I don't day trade personally, but if I did, this 4-hour trend line, or the 4-hour trend to the upside, if we do break that high, that would give me confidence for 15-minute time frame longs. So that's what I would be doing, waiting for that high to be removed. On the 1-hour chart, full transparency here, this was a trade I called out before it took place, and it was a loss. I called out plenty of profitable trades this week, and this just wasn't one of them. So I just wanted to be transparent and show you guys, yes, we do take losses. So that zone was blasted through. When it was, we created a demand zone down below at 1.364. And that could be our pullback entry long. And taking a loss like this, it does hurt, it does sting, but losses are all part of the game. And if you guys need help with your trading psychology for dealing with losses, check out the Stoic Trading Psychology podcast that I am doing. It's available anywhere you get your podcasts. It's also on YouTube as well. Check it out. Let me know what you guys think. So this supply was removed. That trade was a loss. Now we have a 1-hour demand zone down below. I think it's decent for a pullback entry, especially if you are bullish on the US dollar. It is going against the daily trend and the weekly trend, but since we are bullish on the dollar, it could work out. And the zone is not bad. It removed supply, removed a high. The basing's not bad. The move away is pretty good. So I think it's a decent area for a long trade. If you don't feel comfortable with just an entry and stop and take profit, you could just look for confirmation on a 5-minute time frame. It's really that simple. On to the forecast for the Aussie US dollar. This is a very tricky chart to read, and let me explain why by doing a full top-down analysis. We did just remove a weekly supply that was holding for a very, very long time. The weekly, I wouldn't call it a trend, but nobody will deny the strength of the Aussie here. So we're very, very bullish. However, we are very overextended. So that's where it gets tricky. And on the daily chart, nice trend to the upside. If we throw a channel tool on this, look at how overextended we are. This trend line is basically almost irrelevant at this point. It's not terrible, but we are so overextended, which means we could be seeing a pullback. We're at daily supply, but the daily supply is tested. You know what I mean? See how it gets kind of tricky. So I am kind of expecting the Aussie to go up, but I think we could see somewhat of a pullback just looking at the daily chart here. We have a few options. If you are bullish, there is a 1-hour zone down below. I'm personally avoiding the zone. It technically qualifies as far as how I mark my zones, but it's just not great. I mean, look at the move away from this supply over here. Look at the move away from this demand. And this just doesn't have that. It's barely noticeable. So if you do want to trade the zone, you got to trade long on the Aussie. I would be waiting for the zone and then 5-minute time frame confirmation. I personally don't feel comfortable. It barely qualifies in my opinion. Again, it's just the move away is not that great. But it is looking strong. I will say that. How I would be trading it if you want to get in long is waiting for this supply to be taken out, and then hopefully we have a 4-hour demand zone there for a pullback entry. That is how I would feel more comfortable doing that. If you are bearish on the Aussie, we do have this supply that I just pointed out at 0.71. It's actually not bad. It removed a trend line. The move away is pretty good at 0.71253. So again, the daily trend is up. The weekly momentum is up. So this trade for me would be aggressive trade management, meaning 1-to-1, meaning stop goes to half risk or break even as soon as possible, or price goes 1-to-1, you take 75% of your trade off, maybe leave it at there or break even, whatever. Aggressively trade management. It's not a time where, we're low in the curve with nice trend of the upside in the higher time frames, and we're going to look for a massive 5-to-1 trade. It's not a time to go for one of these. It's a time to go for one of these. Nice small risk reward, make a little money, take a nice counter trend trade, and the zone is not bad for it. So aggressive trade management off that 1 hour, off that 4-hour supply. And if we remove that 4-hour supply, any demand there is going to be a pretty nice trading setup, in my opinion, on the Aussie US dollar. So pretty much for me, it's all going to revolve around that 4-hour supply. If you want to trade at this 1-hour zone, I'd be very, very careful. Confirmation, definitely better in that area. But for me, 4-hour supply is very, very clear. And to me, that's going to be the deciding factor on where the Aussie US dollar is going to be going. Alrighty, on to the forecast for the USD Swiss. A little bit of a tricky one as well. Daily downward trend line here, but we are so overextended, and that's why we have seen somewhat of a pullback, in my opinion. So if you were bullish on the USD Swiss, our profit margin is up to the daily supply at 0.788. As far as the lower time frames go, we don't really, I think the 4-hour chart, not very clear. We really don't have anything going on here. We do have a 4-hour supply over here. It is pretty old now. So what I would like to see is some sort of resistance forming here, which gives us liquidity. Then I think that supply would be better. But just let's say we just shoot up to the supply. I personally would avoid it. I think we need to see some sort of resistance forming with stop losses, and then that would give me much more confidence in that 4-hour supply zone. The good thing about it is it's basically at the edge of this daily supply. So we definitely could see a move off of it, even if we don't get liquidity, just based off of the daily chart as well. But again, aggressive trade management I think would be better. As far as trading it goes now, we have a 1-hour trend line to the upside here. We are pretty overextended, it looks like. Let's take a look. Oh, actually, that's actually not terrible. If you were a day trader, wait for below the 50% mark, and as long as the trend line's holding, 5-minute time frame longs are going to be good. There is a 1-hour zone down below. It's not great. I would have, it was barely good here, and we were kind of waiting for a pullback, didn't get it. I would still ignore that zone. I'm going to have it on my charts because I want to see what removes it for my chain analysis, which is basically my whole edge here. If you notice, we are getting a move off of our supply zone. This was a supply zone that I've had on my charts for a while. And I mean, look at how many moves we've gotten off this supply. So there's clearly tons of selling in this area. So if we do push up and remove that supply, any demand that removes that supply is going to be pretty high odds, in my opinion. So that's what I'm personally waiting for. I want to see this very proven supply zone removed, and any demand there, that's going to be a powerful zone, right? Because we've proven to have tons of selling in this supply zone. So just critical thinking here. If the demand removes that supply, it's going to be a very powerful zone. So that's what I'm personally going to be waiting for on the Swiss. And again, if you're a day trader, you could be watching this trend line and looking for longs on a 5-minute time frame. On to the forecast for crude oil. We are seeing lots of strength in oil this past week. I think it'll be short-lived once we get to this trend line here. I think we certainly could see some sort of move to the downside. I thought we were going to get a pullback down to like 53.85, down to this weekly demand, target and liquidity. We're just not getting that. So we can't deny the strength that we have seen here in the crude oil markets. We removed the daily supply. The daily downward trend line looking pretty strong. I guess we do technically have a trend line here. I guess I didn't look at this chart good enough throughout the week, but we do have a daily trend to the upside. So that's definitely a bullish sign on crude oil. Channel 2 shows we are just about to be overextended above the 50% mark. We do have a older daily supply from back here at 69.91. I think that will be, I think that's where, if price continues to go up, I think that's where we will get exhausted and then pull back. It's not a bad zone, pretty decent, removes opposing zone. The move away is pretty good. So if we do continue to see strength in crude oil, that's where I think we will most likely get a bigger pause to the downside. We have seen a couple pauses here. We had this 4-hour supply zone called out ahead of time in the daily market breakdown video. Beautiful move off of that supply. So many of the members caught this trade as well. So nice to see the members in the Discord group catching these trades as well. When we remove this supply, we are left with this demand down at 62.64. So it may not seem like price is going to pull back down to here. I personally think we will. I think we will hesitate here, wherever this is. It's probably a little 15-minute zone. I think we will hesitate here, pull back down that zone, and maybe see a reaction off of it. If we don't, let's say we pull back, and if we break the zone, any supply is going to be a decent little trading opportunity as well. So in my opinion, as a swing trader, all going to revolve around that 4-hour zone. We are just a little overextended for me right now, so I'm personally just waiting for a pullback down to that zone. And the good news is we have a daily trend that would be trading with as well. But again, if we break this 4-hour demand, that's most likely means we're headed down to the weekly demand at 53.85, and then we could capitalize on shorts. But for now, with the daily trend, the nice 4-hour zone, we're going to be remaining bullish here on crude oil. Alrighty, on to the forecast for Bitcoin. Last but certainly not least, I was pointing out this weekly demand for so long. Did get somewhat of a spike below, but if you see the dotted lines, this is our monthly area of demand. So we are definitely bullish on Bitcoin here based off of our higher time frames, which means we prefer longs. On the daily chart, we really have nothing to go off of. We're just kind of hovering around, not really much going on. On the 1-hour chart, beautiful. I drew the zone earlier. And we got a beautiful move off of it. Not the greatest zone, though, if I'm being honest with you guys. And it probably actually should have been this zone. Might have made a mistake there. But nonetheless, nice move off the zone. One option for longs is if we remove that high, we will have a trend line here. But we have to remove the high first. It's very important. And if we do, 5-minute time frame longs are going to be good as long as this trend line's holding. So map out this high and then see the way I drew the trend line. That's exactly how it's going to be drawn if we do remove that trend line. So that's what I'd be waiting for if you are a day trader. As far as the 4-hour chart goes here, we're going sideways. There's really nothing going on Bitcoin right now. Again, the monthly demand is in control, so we definitely want to be looking for longs. I'm just not seeing anything. And now that I look at this again, I don't really look at Bitcoin too much throughout the week. We did remove that supply, but really no demand there. So again, we're just kind of basing out here. We kind of want to wait for this high to be removed as well. But I personally think since the monthly demand is in control, waiting for the 4-hour high to be removed is good enough. And we could start to capitalize on longs, especially if you are a day trader. So not much going on in Bitcoin right now. But again, if we remove the highs, we'll have trends, and then that will be our guide for looking for day trading longs with the monthly and the weekly demand in control on Bitcoin. If you guys want access to my full-length forecast, join the Diamond membership where you will have access to that as well as my daily market forecast, the full course supply and demand PDF, and much, much more. Make sure you guys subscribe so you can catch next week's forecast as well. And I always appreciate a like. Thank you guys, and I'll see you in the next video.